Hello and welcome to the channel. Today we're going to talk about the Euler's exponential, and we will look at it from three perspectives. How you can use it as a buy signal, how we can use it as a cycle top signal, and how we have been using it for cycle prediction. And in the end, I will show you something really interesting. We have something similar-ish now implemented in TradingView. And this implementation was done by someone from the Trading Parrot community, so very much thank you for that. So I will show you in the end how you now can use a variation of this exponential function in TradingView. And also, if you are a Patreon member, for your information, this particular video will be free and also published elsewhere. And one reason of that, of course, is that someone else did this implementation, so it's not fair, so to say, monetize on it only for me in that situation. This will not be an academic session, but if you want to read more about Eulers, there is, for example, publication about it in Nature Physics, where they talk about how Eulers is in everything from science to natural science to financial industry. Let's start with the first point, how we have been using Eulers as an indicator when to buy. And as always, there are no financial advice on this channel. So basically, when we look at the Eulers exponential, we have been using it as a buy signal when we are in the lower range of it. Because as you can see here, since this bull run started, it has been following this exponential line pretty good. And these are some standard deviation added to it, and I do them in a special way using something called cross-validated relative standard deviation. But let's not go into that right now, but it has to do with how good the model can predict. So now we're down close to this line, we consider this good buying opportunities. You see this top here, this dip here, this dip here, and the same with the dips we have recently. I will also show you how this implementation in TradingView works very beautifully for this. Maybe even better than the original Eulers, but we'll come back to that when we look at it. Then, of course, you could use it for sell signal also, even though me personally don't trade like that. Instead, when the market goes up, I put in stop loss in profit and I just keep moving that one up. So the market decides how much profit I will get, then it falls back. And sure, we have been trading this range also, but then it has been on support resistances and other indicators. But for the little bit more long-term, weeks to months and even years, Eulers have been exceptionally good. So this is how we have been using and are using Eulers to get an extra good sense of when it's appropriate to start new long positions. And last time we did this was in that dip here, and that is what I show you every time when I show my trades here. You also see on that chart usually that I started buying the dip here. I did start to buy this dip also. Went up, went down, and then we took out some small profits and then started all over. And even if I kept this initial one, it would still be a good buy considering where we are now. So that was the first bullet, how to use it as a little bit long-term strategic buy signal. What about the top signal? Can Eulers be used to predict when the top is coming? Well, at least in the previous bull rounds it has. So let's have a look at that. Here you see the 2017 bull run, and now of course when we had this explosive blow off top, everything is a little bit zoomed out. We can see here how we also follow this, and usually we follow this for 24 to 32 months. Basically that when we are down here at 500 whatever, we can pretty soon here after just 6 months predict that we will be at 6,000 and 10,000 2 years from now. This we did this bull run. I did a video in January 24 or February maybe it was, claiming that the prediction was 90k end of 2024, basically then 10 months before the year ended. I repeated that a few times during the year and we were very close to 90k when the year ended. And this model prediction works very well all the way until the end. There we have maybe a month or two when it do not work so well. However, it still works in the sense that we see clearly that we deviate, we grow faster than the Eulers exponential predict, and that is usually not sustainable. And there's many good fundamental reason for why this is. It happens in nature when a population grow too fast. It happens when bacteria grow too fast. It happens also when FOMO grows too fast. I'll probably come back to a more specific video to explain the fundamental reasons why this function works so well, because it does not only work for Bitcoin, it works for a number of assets, a number of things in nature. Of course, not for everything, so you need to first validate that it do works, but that we have done now over and over again. And as you can see here, this is about twice the time the predicted value here, not exactly, a little bit more than twice the times. You can see it predicts something like 9,000 and the top was a little bit above 18. These are just the daily closes, so I know maybe we wicked up almost to 20 when this happened. One interesting thing here, it do not only then signal to us that when we're 2x above the predicted value, and all the way before we're more like plus minus 20% in this bull run. And those plus minus varies a little bit from bull run to bull run. Now again, we're similar to this bull run, except that these dips doesn't go so, they're not so sharp as they were here. They're much, much slower, so this is different. But the swings up and down are quite similar. So here we went 2x above. The predicted value was around 9 or maybe even 8. We ended up in 18 something here. Now, if you take this 2x, or at least 2.2 or something, but let's do the math simple. We take then and divide this number here. Let's say it's 8 or 9. And we divide that with 2. What do we get then down here? Well, we get around 4,000. If you do the exact number at 2.3, I think it is, you get to 3 something. And what was this next bear market low? It was around 3,000 or 3.5 or something like that. So this equation works like a rubber band. Whenever you go a certain amount above it, you push down. You go above it, you push down. You go above it, and then you push down. Kind of symmetrical. Not perfectly, but kind of. And the same here, we go this much above it, then we 2 times above it, then we are pushed down with the effect of divided with 2 instead. So it not only gives you top signal, or have done in the past at least, it also gives you a good idea of where we will end up after the bear market is finished here. So let's also look at 2021, because this is just one example. And here you also see the correlation and all those things. It's very high to be financial data. Now, if we look at 2021, it's the same here. You see here we go above it and then we dip below. Approximately the same kind of. But everyone have been saying that 2021 was different. We did not have a blow of top, so we couldn't really have any reasons to think it was a top. But it was different, that is sure, because we had 2 tops. But look here, what is the value here when we are here? It's around 30. I think it's 31, 32. And how far did we go here on the daily in the first stop? Around 64. So what is that? It's once again about 2x, the predicted value. That is a good indicator that we are now in a top. Because you see how we grow faster than the Eulers exponential predict, with some dramatic pullback. We had that 2017 also, but they were much faster. And now what happens here, if we take this value of 30, let's say 32, it's something around there, and divide that with 2 instead, what do we get then? Well, we get 16. And what was the next bear market bottom? It was around 16. See, I think 6.5 or something. See, it doesn't give you the exact number, but a pretty good ballpark number, both situations. And once again, one way that you can add a model on top of Eulers is to use, for example, the same engineering equation you would use to model a rubber band. So it swings above, it pulls down, pulls up, pulls down. And it pulls very, very up, it will pull very, very down. And sure, this time around, in contrast to the second one, we have like a flash up and then down, but we still ended up 0.5 divided with 2 of this overextend. Because this is the only top that overextend. This one is quite close to Euler. So this is the one that breaks everything. There's so much FOMO that have to crash. There's too many weekends, too many FOMOs people in this bull run, to say. And it was the same here after a few months when we calibrate the model. We need usually 6 months for that. We had a good indication of that this bull run would end up somewhere in the 67 to 80k area, actually. If we now go back to the existing one, and these dotted lines are the normal variation, you can see that so far at least we have not had a blow top. This was a little bit close, but for this to be a blow top, the prediction was 50. We would have needed to go up to 100. And I did have a different channel back then, and I said exactly the same thing. This thing better stop now before we go to 100, otherwise I will be a little worried that we have an early cycle top. I actually never believed that because of various reasons. There's also things regarding this breakout. Maybe I should cover this in a different video, but I can mention it that the angle here, it's very difficult for it to break out when this angle here is too high. It's like, I don't know, 70, 80 degrees or something between them. The higher up we come, the more this one will slope, so the same type of breakout will not cause such a hard angle here, and then that type breakout can actually happen. It's a topic of itself, so I will leave it for that just here. But in case you were on my channel back when I insisted that we will not have an early top and this one is just going higher and higher, that was one of the reasons for why I did not believe so. So that was the first to buy signal, at least for long-term strategic entries, top signal, and also an estimation about the next bear market bottom. And then cycle prediction. How do we do cycle prediction? I have already touched upon that if I think of it, but because when we were somewhere here, we did the prediction. This model said we would be around 90 at the year end, we would say, and this 25 year end used to be at 180. I think it's a little bit lower now, maybe 170 or something like that. Then, of course, if we also have this 2x breakout and that happens around here where it happens other time, 150, then it means we'll go to 300. But there's also a chance that I see as more and more possible that we keep going around these lines and do not break out. In that case, we get a super cycle that continues at least 2-3 more years, I will believe. We'll have this 30% pullback, but I do not think in such a case we get those 80-90% crashes during 1 to 2 years, because they have always in the past needed to have this massive breakout so everything falls apart. So we do not have the massive deviation for the Eulers. I do not really think that we will have a massive bear market either. Now, there are other mathematical models that can fit to this data, and they can do the first two quite well, but usually not the predictive part of it. I will just show you one example because we'll come back to it soon. Here, for example, I have fitted a higher degree polynomial, which also follow Eulers and have some standard deviations and has a good fit. Can also be used perhaps for market entry. Maybe it can also be used to capture the top, but it doesn't predict very well because it is overfitted. And overfitting is the biggest mistake in predictive industry of all the mistakes, I believe. And what does that mean? Well, it means as soon as you extrapolate it, it just goes, for example, like this, it could go anywhere. So here I've erased a few data points to see if it could predict where we will be up here, but it goes south right away. With Eulers, I just need this first part and everything is stable. It keeps predicting in the same way. And this is the smartest and best way, and for many unknown way, to validate your models, that you remove loads of data and predict them and see if it worked. So that is what I've done with previous models. This one has been used live for 18 months on a different place, and then that different place is gone. So if you want to learn this, you need to be on Patreon as it is. But now let's move to perhaps the most interesting part, that we finally have something similar-ish in TradingView. I don't know exactly how they implemented this in TradingView, but I think it's either is a moving average or a polynomial. I don't think it's actually Euler's exponential, which means that it will do the buy signals very well as I can see it. Maybe it's even easier and better than the original Eulers. I suspect it can be used to find the top signals also. However, if it is a moving average, you cannot predict future with it. And if it's a higher degree polynomial, as you just saw, it doesn't work well for prediction either usually. But I will let that be unsaid since I don't know exactly what's behind it. But most interesting is that the buy signals it gives are really good. Let me show you here, and also I will show you how to find it. Here you can see it is named Patrik BTC Exponential Model. Patrik is spelled with CK, which is fine with me. And as I said, someone from the trading part community did this implementation and was so kind to even name it after me. So I'm very grateful about that. And as you can see, this line here is a little bit going up and down. That is why I suspect it's not Euler's exponential. Nevertheless, it for the first two purposes, to do strategic entries and also potentially to spot a top, I think this is very interesting. Could be a little bit complementary, could even be better for entries maybe. I guess the future will have to tell. But as you can see here, they've also done these things green when it's buy signal to help us. So here you can see it spot green several times in this area. And also, as you can see, here is red. This is sell signal. Me Personally don't use them so much since I have stop losses and I move them up like that. All these lines on my my past support and resistance line that have been used for trading. If we move forward, it once again here gives you a very good buy signal. Look at this first plunge here, it's a buy signal. Also here is a small buy signal. Perfect to buy here, you go up, right? Buy signal here goes up. A little bit down here, we go up a little bit, right? This entire area is a good buy signal. This area is a buy signal. And if you zoom out a little bit, you see why. We just explode afterwards. Let's move forward. This bottom here that freaked out the market, green buy signal. Here it tells you to buy. Here it tells you to buy. Actually, everything here. And all of them are good buys compared to where we are now. So if you look at the buy signals here, depending on how you, it doesn't matter how you count them, it's 100%. It's not one buy signal that is bad here. Maybe if you bought somewhere here and went down a little bit. So if you're on high leverage or use tight stop losses, which you for the most time should never use, it's very stupid. I will do a separate video about that also and explain why it often is very... what is a tight stop loss? It has to do with the volatility, the standard deviation. But if you are too close to the standard deviation, which tight stop loss usually are, you get taken out even if the market goes in the direction you predicted. Anyway, you can see here all these buy signals, they are very good buy signals. The sell is also good, then there are a few other sells you could have taken. Once again, if you move your stop loss up, you don't really need sell signals, just need buy signals. So all these buy signals, they are, at least from a little bit of a long-term perspective, 100% spot on. It's like, I don't know, 15 of them and 15 good, 15 all of them are ending up in profits quite soon. So this will be very interesting, and my deepest thank you to the person who did this, because I haven't been able to share Euler's Exponential or something similar to it, because I've been mainly using Excel. I've used other things like MATLAB, and prior to that I used specialized financial software for the company I worked for. So I don't have much experience of these things that you can use just off the shelf like that. So please try this one, Patrik BTC Exponential Model. I guess I could put in a link also in the description or something, but that is how you find it. So that's up here. If you need to zoom in, I don't know how to zoom in. Maybe I can zoom in when I edit the video. Anyway, so this was just a short one to explain a little bit about Euler's Exponential, the three things we can use it for. And the big news, there is something similar-ish that seems to work very well for, I call these strategic buys, because these are a bit longer term buys. Then you see on this support bands here that we have been doing loads of trading also on a shorter time frame. But the key is to get into the strategic ones, because then if you bought here and we're up here, it's very easy to buy, because even if you do a mistake and market falls, these purchases here are so much in profit, they cover for the potential mistakes or losses you have up here. So that was it for me today. Thank you everyone for watching and hope to see you soon again.